Welcome everyone to today's OD6 Metals Investor Briefing webinar. It's a pleasure to have you with us. My name is Lucas Robinson from Investor Relations Consultancy Corporate Storytime. I am delighted to be joined today by Brett Hazelden, Managing Director and CEO of OD6 Metals. Brett will be walking us through recent developments at OD6's Splinter Rocks Rare Earths and Gulf Creek copper projects. Following Brett's presentation, we'll open the floor for a Q&A session. So without any further ado, I'm pleased to hand over to Brett.
Thanks, Lucas, and thanks everyone for joining just before Christmas, a week and a bit to go. It's been a big year for OD6 Metals and obviously two projects running this year as well, which has been busy for us. So let's just touch on, there's a lot of slides here, they're all available on the ASX. I won't go through every slide in detail. I'm happy to obviously take any questions as Lucas said, but we'll hit the high points, get through the detail on certain slides, and then really just go through where we're at. So investment highlights, obviously strong rare earths and copper demand is still sitting around there. Copper prices at record prices at the moment, $11,000 a tonne. Rare earth prices come off their $50 a tonne a kilo low for NdPr, now sitting about $72 a kilo NdPr, so that's up on the last couple of years. In terms of the projects ourselves, Splinter Rock Rare Earths project still sits at that great resource of 682 million tonnes with 1,300 parts per million trio. I will point out that the indicated resource on part of that is just over 110 million tonnes at inside centre, at a grade just over 1,600 parts per million as well. So that's been sort of our focus on both metallurgical and also the mining studies we're doing at the moment on them. We have, on those mining studies, we have been continuing to put out some good results there throughout the year, and ANSTO has now started a lot of work on the accelerated scale-up testing that started there as well. So that'll occur between sort of late last month through to probably June at this stage, a mixture of things happening there, and I'll touch on that as we go. Key for us this year is we have produced a mixed rare earth carbonate and a mixed rare earth hydroxide. Key for us has always been working backwards to have a really high quality product that is then saleable around the world, not just to China or markets that can take things with lots of impurities in. So we've been able to achieve that. We've also been able to achieve really good metallurgical recoveries at the same time, around that 75% average for your key magnetic rare earths. And now we're obviously looking at offtake engagement that we've been doing for obviously a couple of years now, talking to lots of different people, and obviously the continuation of our studies. Gulf Creek Copper, we took over Gulf Creek Copper at the start of the year, so the tenement came in to our ownership about the 7th of January this year. We've done a lot of on-field works, both in terms of geophysics, sample selection on site. We've done two drilling rounds so far. First drilling round finding up to 4.6% copper, confirmed underneath the old workings. And we've recently just done a small drill program looking at the repeat structures in the area as well, which I'll touch on as we go. And as we speak out there today, we're still doing downhole EM, so I'll also touch on that as we get into the detail. I thought I'd also start off with the capital structure. It's been good that our share price has sort of started to rebound off those lows part of the way through the year. I still think we're well and truly undervalued compared to some of our peers at that $19 million market cap with about just under 3 million in cash at the moment. So an enterprise value of 16 mil. So it puts us with lots of upside there. We've still got a really good corporate snapshot or capital structure, we should say, in terms of just under 200 million shares and with about 75 million options mostly on those as well. Point to note here is East Coast Research. If you click on that link that's in the presentation on the ASX register, that will take you to the research report that was recently released by those guys. They've got a 31-cent price target on us. So that obviously puts a lot of upside on sort of that 9.6 cent where we're sitting today. So plenty of upside there, and that then gets us back into similar territory along with a lot of our peers. Let's jump into Splinter Rock and then we'll do Gulf Creek a little bit later. So again, a bit of a summary. I did touch on this. I won't go through every single point here, but good fundamentals all the way around. We've managed to get high quality products. Very low uranium and thorium, which has been a tripping point for a lot of the players that are floating around at the moment or have just come on recently, and also a superior product there in terms of aluminium, iron, phos and silica levels. So we've done really well on those point of view. We've been engaging with CPC and both ANSTO on the studies at the moment. We've been optimising the capital and also the operating costs as we go through the process. And our next step is waiting on those accelerated ANSTO scale-up tests. So we've got 2.5 tonne of metallurgical core that we sampled just a couple of months back. It's now gone over to Sydney to ANSTO. It's now getting through all the sample preparations. Having reviewed the core myself and played with it and touched it whilst it was available, there's a few interesting sites in there that really makes for heap leach should work really well, but it also sort of opens up the opportunity for potential in situ leach. So some work we might look at early next year, but our focus is on heap leach, but there is some potential there for in situ leaching in those big bold areas. Uh, Rare earths, I think everyone's really aware of rare earths. When we started just over 3 years ago, no one really knew what they were, but 15 elements there at the bottom of the periodic table. We're obviously focusing on NdPr, Dy, and Tb. That's where the money is. About 90% of the value for virtually any project around the world is. You do also obviously get a lot of credits coming from some of the heavy rare earths, which we also have as well. So I have touched on the mixed rare earth carbonate. I won't go through it in detail on this slide. There is another slide that comes up with a bit of the summary of the assays that came out of that. But the key for us is this was based on our inside centre project or prospect or deposit. 119 million tonnes at just over 1,600 parts per million trio. And importantly, the recoveries are sitting at 75% of your rare earth oxides effectively, or sorry, magnetic oxides. So I'll touch on that as we go through, but that is an important focus for us. That's where we're focusing moving forward. As I mentioned, 90% of value will come from the NdPr, Dy, and Tb. And important note, we're not on farmland. We're located close to the Port of Esperance. There's no major issues that we've seen from the spring surveys that we've done out there to date. So from an environmental point of view, so we're really happy with those outcomes. No doubt as we go through the system, there'll be some little critter or something that will pop up that we'll have to deal with, but there's plenty of similar territory out there. Importantly, there's also no private royalties that you also see that some of the Brazilian projects have. I won't go through this slide. That just really gives you a build-up of where the value is, but also the trio distribution. So pretty standard, similar for a clay-coasted deposit. But you do see a number of other ones that a little bit different, where the yttrium level's a little bit higher, a little bit different mineralogy there. But we'll touch on that. So we haven't done any resource growth this year in terms of drilling. So our focus has really been on metallurgy, which has been to crack the metallurgical nut, which we've done. There has been requests by various investors that why don't we go and get 1 billion or 2 billion tonnes and just make it really, really big. It's something we're looking at. If I change the cutoff grade, it would actually have 1 or 2 billion tonnes as it stands on those red areas that are shown there. And then if I just zoom into that little pink area that I'm just circling or have my cursor on, that's the inside centre area with 110 million tonnes. So the areas in orange below that, where the clay basins are, there's huge potential out there to go to get 1 billion tonnes. Our focus has been to get the metallurgy right, make sure it's actually extractable and recoverable, and then obviously look to see what we do next in terms of expansion. So next year, potential that we might look to expand that resource. We'll definitely be doing some infill drilling is the plan, and potential some expansion of the resource whilst we're out there. So with any luck, we should see that expand well past 1 billion tonnes. That said, if you're treating 5 million tonnes per annum, which is what most projects are looking to do, just as a bit of a benchmark, 100 million tonnes gives you 20 years mine life. So the key for us is find the best zone and obviously work on that best zone, which to date is inside centre. There's a bit of a view on inside centre there, or centre as well. So the orange levels are the inferred areas around the centre resource, and then inside centre is a subset. So inside centre is open to the southwest and also to the northeast. It does sit within what's like a feeder stream or a bowl type area, which is sort of makes me a little bit intrigued about in situ leaching to some extent. It also has very thick layers there. So you'll see a lot of Australian and other ones around the world that are sort of between 1 to 5 metres in thickness. They'll be hard to mine, and they've been focusing on certain areas within those when they're producing MRECs, so a 1 or 2 metre seam. For us, we're looking at a 50 to 70 metre main zone at inside centre there. So for us, that's our focus. Smaller footprint, lower stripping ratios. Just imagine stripping for a small couple of metre seam with 2 to 3 metres of head or work to be removed. So that suddenly stripping ratio gets up and your mining costs get up. For us, at the moment, we are going through the mine planning and design at the moment as part of our study process, and we'll release some of those numbers probably in the new year at this stage. Unique geological formation. So there's rare earths aren't rare earths. We all know that. There's lots of different types of rare earths that we can talk about. Hard rock guys have more of your what you'll call your primary rare earths, and then the clays are generally secondary derivatives of those. So they've been weathered out or they've been put into a process over millions of years that makes it either easier to extract or just changes those primary rare earth products into secondary rare earth products. The key for us is the area around us has been really acidic waters. So they've been a pH of 3 to 4 and still are today around the deposits. That's taken out a lot of the readily leachable rare earths and put them into either solution or reprecipitated them into other areas. But the key for us is we do have rhabdophanes and mainly, along with a couple of other different mineralogy elements there that are readily acid leachable at ambient temperatures, obviously with a relatively strong acid in terms of hydrochloric acid, but we don't need to elevate temperatures like you see in a few of the other projects, both in Australia and around the world. So that obviously saves us both operating costs and capital costs going forward. Um, so have a look at that slide. I'll also sort of have a look at that CSIRO report that we also put out recently. There was also an early one early in the year from Murdoch and Monash and a few others. So it's really going through how this project is a little bit unique and how it's different from a lot of the other ones that you'll see both in Western Australia, Australia, and around the world. The processing steps, I've touched on this a little bit with a lot of people, but there's the processing pathway. It's a leach pathway. We have looked at originally tank leaching. The more we looked at tank leaching and the costs associated with thickening, clay washing, but more importantly, solid liquid separation. So to be able to remove your rare earths, you need to put it into a solid and a liquid, take that liquid and then precipitate it out. So the solid liquid separation, especially at Serra Verde, which is one of the more recent ones in Brazil that's just come on stream. It's a private company, not listed at the moment, but they've struggled in that solid liquid separation. I've heard 10 filters in there with lots of power and lots of filter capacity, so that drives up the cost quite significantly. Obviously, if we can do heap leaching, we're just putting it through potentially a sizer. I don't think we'll actually need to. I think potentially we'll be able to put it straight into an agglomerator or even onto the leach pad. That's part of the work ANSTO's doing now. The original work was based on agglomeration with a flocculant and a little bit of acid. That then gets things moving quite well. Part of what we'll be testing going forward with ANSTO is different acid strength, agglomeration requirements, and do we actually need to agglomerate at all? So that would depend on how quickly it percolates through those systems. And the core that we did look at and get from the most recent splinter rock drilling was a twin holes of existing work. So we're comparing apples with apples there, but there was a lot of granular type material in there, which would help promote obviously heap leaching, but also help with the water flow rate going through forward as well. Importantly, what we've done as part of this whole process is we've brought in what's called nanofiltration. So a bit like you see with desalination, but at a different scale. It separates out the really fine atoms from the bigger atoms like the rare earths, the fine atoms being the hydrogen and the chlorine. So we can recycle about 84% of the acid back around the process and back into the various leach pads as we go through there. So that's a massive operational saving for us in terms of cost for very little capital outlay. We've also looked to bring in ion exchange. So what nanofiltration does, I also should say as well, it actually drops about 69% of the volume that goes downstream. So it just decreases our overall capital requirements in terms of size of processing facilities. Back to ion exchange. Ion exchange is really just there to try and help knock out some iron itself. So not iron as in ion exchange, but iron as in iron, the ferric ion. So it helps drop out some of that along with a bit of aluminium. It just takes a little bit of pressure off the impurity removal circuit and then helps get obviously high quality product in terms of mixed rare earth carbonate. We've also put in another little uranium ion exchange process in there just to touch up and remove any potential uranium in there. We actually don't have any really massive levels or high levels of that in the process itself. Our uranium levels are sort of less than 10 ppm. So it's actually quite low, but it does concentrate out through the whole process. And again, Serra Verde had problems with that concentrating up and causing them to have troubles being able to legally transport it around the world. So we're happy with where the process sits at the moment. We're now optimizing with ANSTO and we'll continue to optimize it over the coming couple of months to 6 months. Importantly, that process that we've put through there, these are overall recoveries, so not just leach recoveries. A lot of people only report leach recoveries. So these are overall recoveries, including impurity removal. NdPr is right up there along with the samarium, EU, and GD as well. So they're quite really, they're products that are chased at the moment, especially the samarium. The holmium and yttrium are also chased at the moment from various governments around the world. So overall, our recoveries still sit at around that 60+%. But importantly, we not just only recover the light rare earths and the magnetic rare earths, but we are also recovering those heavy rare earth elements, which add significant value to the project as well. So let's touch on the MREC quality and impurity composition. So it's a complex slide here. The key for us here is if you come down to the bottom, anything above 50% is really good. We're obviously sitting 56 to 59% with the two products, still at that 75% recovery. So from that point of view, really good. But importantly, the impurities on the right-hand side here, what we need to be looking at. So relatively low aluminium. Calcium's a little bit high in that one, but we think that's just that will actually come out as we do larger and larger samples. But everything else as you go through there, silica at low levels, zinc, and obviously the uranium and thorium less than detection limits at that time. So what that does enable us to do is obviously talk around the world. The highest quality specs that are being sought around the world are generally coming out of France and Belgium, out of Carastar and Solvay. So obviously we've been talking with those guys along with people in Australia, America, and Asia as well. So we'll continue to have those conversations, and we'll continue to refine that product quality as well. Most people will be familiar with Esperance. So I won't go through this in detail, but there is a bulk port out there. We don't need to do any work down there. We put it into sea containers, and there's a sea container shipping line that goes out of Esperance as well. We're serviced by an existing road network. The last 30, 40 Ks just needs to be sealed going forward, but the rest of it's sealed all the way to port. A benchmarking slide. I'm not going to go through this one in detail. A lot of people have seen this and heard me talk about it. But I suppose the key just to work through here is there's some heat leaching examples here in terms of OD6 and IXR. There's some leach tanking examples here in terms of MEI and BMM in Brazil, with Victory being a leach tank derivative, but also doing it at higher temperatures, which is obviously reflects the mineralogy. BCM in situ leaching, so that's one really to note over in Brazil. A little bit lower grade, but the capital and operating costs are really low on that one. So it's probably my favoured Brazilian project out of all of them. Lindium, which is a hard rock monazite, along with Luca also being monazite, and Arafura being an apatite. So the other ones are all clay hosted. These ones are the hard rocks, and then what you'll see is with the hard rocks becomes high capital costs to get to a MREC or a rare earth oxide, depending on what they're looking at producing. But if you can sort of look at the comparisons here, generally heap leachers and also in situ leachers, very low capital costs. The leach tanks are sitting around that 350 to 400 million US mark. Victory, obviously a little bit lower for some reason, even though they're heating up at a higher temperature. So I think that one's something to watch and will escalate over time. But you can see there's differences in the profile and then differences throughout also the operating costs as well. So the lowest operating costs generally being in situ leaching at 6 kilograms a ton, tank leaching, and then obviously increasing to heap leach and then into a few of the other ones as well, hard rocks. Market capitalisation, we're still only market capped at that 19 million compared to a lot of the other peers there. So we still think we've got plenty of upside there. And part of that upside really comes from that East Coast research report. I really encourage people to have a good read of it. It obviously is a paid research report, but the guys have taken it all from public information and everything else. What I think they've done is a really good analysis, and they've looked at it from a recovered trio basis. So instead of looking at what everyone's head grades are, they've taken into account what happens when you actually recover it, because some recoveries are as low as sort of 30 or 40% or even lower. So what we see on the left-hand chart here is, say, Critica there on a recovered basis actually sits below ourselves on a recovered basis going forward. Meteoric and Viridius minerals, both out of Brazil, still sit at really good grades, a little bit higher than all of us. But then you see obviously a few of the others with lower recoveries having a really low effective grade, including Victory and IXR. So that drives some of your operating costs, because if you're obviously not recovering rare earths, you can't spread those costs across all those rare earths. So importantly, and major difference between us and say IXR is our recoveries were sitting closer to 75%, with the IXR sitting around that 30-40% mark. So it's a really good chart, a really good piece of research done by East Coast Research. It still says these Brazilian guys are doing not too bad, but we're competing with everyone as well. The other interesting one on the right-hand side is again, a recoverable trio in terms of total tons in resource. And obviously we can move all of these in terms of total tons with more exploration, more success out there. But the key for this one is the bubble size here is reflecting enterprise value. So it just says enterprise value wise, we're fairly well undervalued when you start comparing it to a number of the other parties around there. So hence their 31 cent research target or price target for us. And with any luck, we'll get some re-ratings over the next 12 months. So next steps at Splinter Rock, ANSTO test work, as I mentioned, whole heap heap leach optimization. I won't go through the details there, but we're obviously playing with a number of different things there, just trying to improve the economics, improve the recoveries, or even take a little bit lower recovery for a better overall economic outcome as well. And part of the whole process for us is getting a large MREC that we can actually send around to customers around the world, and just have those detailed offtake discussions, because whenever I talk to them, they all want a product. I mentioned earlier that we're doing a mining study at the moment, so we've done a lot of the optioneering work on the processing facilities. So now our key next step is really to do the mining study, understand stripping ratios, pit shells, mining costs and schedules, and just make sure we can optimize that as well for the future scoping and pre-feasibility studies that this all leads into. And I've mentioned earlier, engagement with offtake partners will keep on going, engagement with government and potential financing partners. We are currently onboarding someone that's well known in the government sector to help us do some strategic advice there. So she will help us, no doubt, in the new year with lots of things, and that'll probably be announced early in the new year as well, as that's all finalised. The other work we have done, and we've been looking as part of sort of the option study that we've been doing in conjunction more with ANSTO on this one, is we can produce a rare earth, mixed rare earth carbonate, but we can take that one step further and produce a whole heap of oxides. Now, if you went and produced all 15 oxides, that wouldn't be economic. And if you look at Lynas as a good example, they've produced NdPr to start with as an oxide, and they've more recently just started producing a TB and DY oxide. So there's a pathway there that's well proven and trodden as well. They're also now looking at their next steps to actually produce other rare earths oxides over and above those four mentioned there. Equally, Lynas is obviously a perfect person to be selling an MREC product to, given they've got all the experience there. So that's another option for us as well. So let's touch on Gulf Creek now. Obviously, a historic mine back from 1896 through the 1912, with not much exploration actually ever happened in terms of real drill holes. They would have tripped over it once upon a time. It's located north of Tamworth there. Barraba is the main town that we stay in when we stay there, and then a short trip out there, about half an hour trip in and out to the mine site each day. So good location, good near to Port of Newcastle, obviously in New South Wales, and has been an entertaining learning experience, let's put it that way, on how New South Wales operates, and we're all on top of that now. The first 6 holes that we did in the maiden program obviously went underneath the old workings there in black, hit the red seams of copper that were expected, and proved that there's obviously continuation of the deposit as it goes deeper. The phase two's testing, which I'll touch on in a sec, but we had planned to do 7 priority holes. We've only done 4 priority holes, one into each of the main areas. The reason we pulled up a bit earlier was we were doing diamond, which is quite costly, but we were getting rain delays, lots of lightning delays, and it was just slow drilling rate. So we've pulled up a little bit early. We've got enough holes into the current targets to then do downhole EM and then optimize the works or the next set of drill programs. And we'll look to bring in an RC rig, which is what we did with the first 6 holes, which is a lot cheaper and quicker and gets through the program. But importantly, the diamond drill holes that we've done has actually just continued to confirm that it is a VMS system. It comes from VMS systems were formed on the seafloor through a little volcanic activity. And you can see obviously some of these red parts here being your massive sulfides or your magmatics that come through. And then as they've been thrust up and faulted over millions of years, they get moved around. And then obviously this is what we're sort of looking at for Gulf Creek now, quite a steep dipping project, and we can easily miss by drilling parallel to the areas. So both the first round and the second round of drilling confirmed obviously those seabed sediments, the jasperlites, which is a key what they'll call a white smoker, and then the black smokers are generally massive sulfides, which is what we saw in the first round of drilling. I won't comment too much based on ASX limitations on visual estimates and all those type of things, but we've again seen similar profiles all the way through with some sulfidic stringers that are coming through. The key from the first round was that these sulfides were associated with magnetite or magnetics. So there seems to be a peak with those magnetics, and that's generally what we've been focused on from a target point of view. And when you look at these structures from a magnetics point of view, there's Big Bend, the West Anomaly, and Northwest Anomaly that we've been targeting. So as I mentioned, 4 holes into each of those. Downhole EM is currently underway to obviously look at what we're going, look where we've got and where we should be going in the future. And then if we just look at the mineralization or what we're looking for in terms of the target structures. So there's the old Gulf Creek mine in that left-hand picture where my cursor's circling at the moment in the dark. The white where the original holes were put in. We've put in a new hole that goes deeper underneath Gulf Creek itself. And then you can see one at Big Bend, one at West Limb, and one at Northwest. So these are big areas and big targets. Having only a couple of holes in there is probably not doing it justice in terms of full exploration, but we obviously need to be mindful of costs and how we follow these up. So what you'll see mostly around the world is they'll stick a couple of holes in, do the downhole EM, and then retarget based on those, because the downhole EM will see sort of 50 to 100 meters around that. And you can see here we targeted a fault zone in through there, a massive area that sits in Northwest, and what looks to be a bend from around the Gulf Creek area. There's also all these lower magnetic ones here that can also be potential targets for us. And then if we zoom out, so again, looking at this area here, that's the Gulf Creek area. There's another old mine to the north, which was the Murchison Historic Copper Mine on our tenements. Again, has a very similar signatures. So we need to get the exploration technique and work right, and then obviously continue to follow up with further drilling. So some highlights on Gulf Creek copper. Obviously, record copper prices that I mentioned earlier and strong market fundamentals. We've confirmed there is high grades there. We're now just trying to find where they're heading underground and where the best zones are going forward. Historically, the grades were up to 12% copper, so it is a high-grade project that has some big upsides for something that doesn't need to be massive in terms of tonnage. We've still got those high priority targets, 3 to 10 kilometres of target horizon there. The downhole EM survey is currently underway. Will be wrapped up in probably this week, and then we'll get the results early in the new year to figure out where we continue the drilling and where we've put those holes going forward. So we do have that 25-hole program that's been approved for 7,500 metres. We've only used about four of those holes now, so plenty of holes still available to us. Assay results obviously coming from those four holes and from the recent drilling, and plenty of work obviously to go out Gulf Creek going forward. So two good commodities there, rare earth and copper. So we think it's good dual stream, especially if one suddenly has a bit of a dip when the other one's going. It gives us good continuity throughout the market cycles. So that's the presentation. I think I'll throw it back to Lucas, is how we do it next, Lucas, and whatever questions might have popped up, I'll try and attempt to answer.
That was great. Thanks a lot, Brett. The first question from the attendees, the rare earths market has been on somewhat of a roller coaster ride recently. How do you see the market dynamics currently?
Yeah, so it's obviously a geopolitical hot potato at the moment. Prices for the last 2 years have sort of fallen back from highs of 120 to 130 or even higher. It was actually closer to $200 a kilo at one stage, NdPr. Fell back in the last 20 throughout 2024 and 2025 to be about around that $50 a kilo NdPr. Today, if you look at it, it's about $72 a kilo NdPr. So the market's on the way back up. It's probably not at a level that really justifies all these Western projects to come through. Um, Linus had a good presentation as part of their AGM. Some really neat pricing charts in there that actually say where the price is at the moment. Probably is around the historic long-term average. So pricing's actually reasonable in a long-term perspective, but it's obviously being controlled by China. And it's also looking at, from China's perspective, they're looking at the whole market dynamics from not just a monazite or a hard rock. They're looking at a mixed rare earth carbonate through to an oxide, through to a metal, then into a magnet, and then into an end product, which is obviously what they're selling for a premium. So interesting dynamics from that point of view. The other interesting dynamic has really been the US government that stepped in with $110 a kilo floor price for MP materials. That's interesting. I generally don't like governments manipulating or interfering with open markets, but I suppose we're not an open market, given China's doing the same thing. But $110 a kilo really does set a good benchmark going forward for where people think prices might be. Interesting enough, MP materials have been sort of the project itself has gone bust 2 or 3 times over the last few decades. So they've been losing money probably for the last 2 years. So they really needed some government intervention to still be a viable producer. I think China and others knew that. So good intervention. Whether we'll see other governments do that, not sure. I suppose the key is what's the forecast demand there. Again, I think Linus had a good slide in their AGM. Go have a look at that. I think they were forecasting virtually a doubling of demand over the next 10 years. So if that's the requirement, then we obviously need a few more mines, through a few more mines, I should say, to come through. And prices will have to go up to make those, to get to an incentive price that will allow those mines to be banked effectively.
It's a good overview. Thank you. The next question, can you provide an update on the studies the company is undertaking on the Splinter Rock Rare Earths project?
Yes, I did a bit of an update on the way through. Obviously, we've done a lot of work around ANSTO and CPC through the optioneering with the process facilities. So we've optimized that to date. The next step for us is really to see where the current scale-up works with ANSTO sits. So that work is obviously working on that 2.5 tons. We'll try and optimize the acid usages, the impurity removal steps a little bit further. So that's key for us to be feeding into the studies that we're doing at the moment. Based on what we've seen, and based on ASX listed rules at the moment, we can't put out the CapEx and OpEx numbers, even though we've got a good idea of them, based on where we're sitting with the study profile at the moment. So yes, we are working on future scoping studies and pre-feasibility studies, but we do want to make sure the test work that feeds into those studies reflects obviously the outcomes that we'd be expecting on a scaled up basis. I did mention earlier that we're also doing some mining studies, so we'll probably put out something around that early in the new year, which is associated with obviously stripping ratios, pit shells, etc., and also costs. So we'll be looking to optimise that work and how that feeds into our studies going forward. But the anticipation is over the next 12 months, we'll be looking to put out scoping study and a pre-feasibility study going forward. Obviously, pending those ANSTO results.
Very good. On page 12 of the presentation, you mention the fact that splinter rock is different to other clay-hosted rare earths deposits. Can you briefly expand on this?
Oh, that's a big complex area there. So as I mentioned earlier, rare earths aren't rare earths. Let's start with how do we answer this one? Let's start with hard rock, guys. So generally, people will be familiar with terms like mineralogy or mineralogical terms like apatite, xenotime, monazite, and bastnasite. So they're generally the ones that are being mined today or being proposed to be mined from a hard rock perspective. They're generally they need cracking and leaching at higher temperatures to be able to extract the rare earths out of what's there. So imagine a Luca monazite. They need to, you can't acid leach it as it sits. It needs to be cracked and leached or released to and leached or being able to. Sorry, go back a second. It needs to be cracked so that it opens up all the pores to enable it to be leached and then put into solution and then turned into a mixed rare earth carbonate. So hence the monazite as itself can be sold into China as it is now, and they do all the processing over there. But a payability of that's probably 30 or 40% of your mixed rare earth carbonate. If you sell a concentrate like Hastings or a Luca, not a Luca, um, Linus has been doing, Linus has been doing to themselves into Malaysia. Obviously, you step up a little bit in terms of payability, but it still needs to be cracked and leached. So if you think of Mount Weld and Mountain Pass, they're taking a bastnasite, cracking it and leaching it, and then turning it into a mixed rare earth carbonate. The mixed rare earth carbonate in Mount Weld's or Linus's perspective is being done in Malaysia and then turned into selective oxides. All those ones are resistive to acid at ambient temperatures. So every project needs to use an acid. So it's always an amusement to me when people say, "Oh, you're using hydrochloric acid." Most people are either using a hydrochloric acid or a sulfuric acid, regardless of whether it's a hard rock or a clay, because you generally always need to lower your pHs at least down to a pH of 3 or 4, or not even lower. If I move from the hard rocks to the clays, the mineralogy there differs a little bit because generally what's happened is those primary hard rock mineralogy's been further refined or through weathering. So what you'll get is a number of other products or secondary derivatives. So it gets a little bit complex here, guys, but generally ours is rhabdophanes, and we also have what's called a parasite and a syncosite. So the derivatives of either a monazite or a fluorocarbon, it's all those. But the key for us is they are readily leachable in acid at ambient temperatures. So that's good for us. We don't need to crack it. We don't need to leach it. We don't need to do any of those things. But if you then look at some of the other projects around Western Australia, they'll start talking about churchite or fluorescite or another set of names that I can't remember, which would be Goerxite or something like that, and I've got that one wrong. But effectively, what they are, they're further derivatives again, but those uh, mineralogies actually need to be either concentrated up and then put through an acid bake, or they need to be leached at higher temperatures, so circa 60 to 90 degrees, that you see at North Stanmore, the Victory project, to be able to extract decent recoveries out of those. So for us, we've got slightly different mineralogy. It's able to be leached through ambient conditions with hydrochloric acid, obviously at a strong acid, but we don't need to increase temperature. We don't need to concentrate it up, which was a pre-step. And you'll see someone like Critica, they're pre-concentrating up to 1 or 2%, which is virtually where Hastings is starting, all those type of, or Arafura. And then they're still having to acid bake and then leach those as well. So we don't have to have all those extra steps, is probably what I'm trying to say, which makes our mineralogy unique. So complex answer. I've probably confused lots of people, but it's a confusing space for investors and also probably most managing directors, really.
Oh, I think you know what you're on about. Um, Next question. Can you explain why splinter rock has several advantages in terms of recovered total rare earth oxides as identified by the East Coast Research Note?
It's probably a good segue from the whole the question before on all the different mineralogy. So obviously the mineralogy I just spoke about before drives a lot of recovery. So if you're having to do more acid leaching and higher temperature things, your recoveries um, do differ, and you'll see someone like Victory that will concentrate it up and everything else. They will report an 80% recovery on the fines portion, but by the time you take that back to a head grade, it's probably still sitting around that 40-50% recovery. So for the work that East Coast Research did, it was really good research. They really identified the crux of the issue, saying it's not all about head grade, it's actually about head grade and recovery. Obviously, grade covers a lot of sins, but if you've got good recovery, um, you can compete really well. So they had that slide in there, and I can't remember what the slide number now is off the top of my head, but those bubble charts there, have a really good look at it. It really does show that we sit at a on a recovered grade point of view, sit generally above most of the people in the Western world, with the exception of Viridius and MEI out of Brazil. But pros and cons on some of that. So plenty of upside there. I'll probably leave it at that from that point of view, Lucas.
And for the audience's information, it's slides 17 and 18 are the ones in the presentation that reference the benchmarking to peers. This is our final question, Brett. OD6 has already produced a high-grade mixed rare earths carbonate and hydroxide product in test work. What are the logical next steps in the processing pathway, and can OD6 continue to produce higher value products in the process flow sheet?
So I did touch on some of this. So we've obviously produced a good MREC product, so the quality is really good already. So we can obviously optimize that product. It's already a high value product in terms of a mixed rare earth carbonate. So generally, if you're selling that into China, you're getting 70 to 80% payabilities at the moment. Whereas a monazite, which obviously hasn't got to that high value end and it's still in a rare mineral form, they're getting sort of between 30 and 40% payabilities. So for us to take that payability up even higher, it's probably you can't necessarily do that with a mixed rare earth carbonate product or a hydroxide product. We'll obviously continue to pull our levers and adjust and optimize what the best quality product is in terms of the processing steps that we've been doing that I mentioned earlier in terms of those flow charts. But I have also mentioned that we're looking potentially at doing selective mixed rare earth oxide. So that virtually takes the carbonate and turns it into a pure NdPr oxide or a dysprosium oxide, or etc. I do see a lot of people putting out ASX announcements that say they produced mixed rare earth oxide. I don't really understand that because it's still not a separated oxide. It's still got 15 or 16 different elements in there that still need to be separated out through a solvent extraction process. So um, I think people just need to be careful of that. What's a saleable product and a known product is the mixed rare earth carbonate. That then goes into solvent extraction that's done around the world, and that then separates out individual rare earth oxides. So for us to go the next step, we would, and have been looking at this with ANSTO, is what are the economics about going to an NdPr oxide was as step one, which is virtually what Linus has done. And we're following Linus's playbook here. They've now gone to the next step of a dysprosium and terbium oxide, so we could potentially also do that. But going to any of the other oxides as individual oxides really isn't economic, would be my thoughts. And if Linus hasn't done it already, even though they're looking at doing it now, it probably tells you something about the economics of it all the government support that's needed on it. So, look, we think we've got a good, back to probably the question, we've got a good high value product, which is an MREC product. If we want to take the next step, we'd be very selective on an oxide that's either NdPr or dysprosium or terbium, but not the whole individual oxide suite, which would cost hundreds of millions of dollars.
Terrific. Well, that brings us to the end of the Q&A session. As always, if you have any further questions, please feel free to email us at info@corporatestorytime.com. Brett, before we close, do you have any final comments you'd like to share?
Look, I just think thanks for the investors. Thanks for everyone who's obviously tuned in today or will listen to it in the future over Christmas. Have a good Christmas and New Year's. We'll be back. We've obviously continued to work through there ourselves. We'll be back on deck with lots of good work coming from ANSTO, some of the studies that we're doing, and obviously looking to see what the downhole EM and assay results say as well out of Coal Creek. So two good projects there. We just need to work through the stages, and yeah, everyone have a good and safe Christmas.
Thanks, Brett. That's a very comprehensive update and lots of good news seemingly coming down the pipe. On behalf of OD6 and Corporate Storytime, thank you all for joining us, and we look forward to welcoming you to our next investor briefing. Enjoy the rest of your day and season's greetings, and thank you very much, Brett.